Washington House and Senate Republicans have reached an agreement, in principle, on a consensus tax bill, keeping the party on track for final votes next week with the aim of delivering a bill to President Trump's desk by Christmas, according to people briefed on the deal. Senator John Cornyn of Texas, the majority whip, told reporters that Republicans will be briefed on the deal today, and that he is confident it will be approved next week. The agreement drops the corporate tax rate to 21% from the current 35% rate and will go into effect in 2018, rather than 2019, as the Senate bill originally called for, according to a senior Republican congressional aide. The bill also allows individuals to deduct up to $10,000 in state and local taxes, split between property taxes and either income or sales taxes paid. That move is intended to alleviate the concerns of House Republicans, particularly those from California, over the bill's treatment of the state and local tax deduction. Lawmakers also agreed to rescind the corporate alternative minimum tax, which was tucked into the Senate bill at the last minute as a way to pay for the $1.5 trillion bill. The inclusion of the corporate AMT was criticized by many business groups, who said it would prohibit the ability of companies to use tax breaks such as the Research and Development Tax Credit. The top individual income tax rate will drop to 37%, down from the current rate of 39.6%. But the rate will kick in for income levels below the $1 million cutoff outlined in both the House and Senate bills. The conference bill will preserve the individual alternative minimum tax, which the House bill had eliminated, and the Senate bill retained in a watered-down form. The conference version will apply to even fewer taxpayers than the Senate bill would have, the congressional aide said. The agreement in principle appears to allow some high-earning business owners to claim an even larger tax break than the Senate bill would have. Negotiators agreed to keep the Senate's approach to provide a tax deduction for so-called pass-through companies, whose owners pay taxes on profits through the individual code. That deduction will likely be lower than the 23% deduction in the Senate-passed bill. But, the aide said, the conference bill will include a House provision that would allow some pass-through owners with few employees but large amounts of investment in their businesses to bypass a limit on how much income qualifies for the preferential deduction. The conference bill would also largely retain the Senate approach to taxing multinational companies. President Trump praised House and Senate negotiators in a lunch meeting at the White House. "We're very close to getting it done, we're very close to voting," Mr. Trump said of the tax bill. He added later, "This is the biggest thing that we've worked on." Mr. Trump also indicated he would accept a reduction in the corporate tax rate to 21% from 35%. Until recently, Mr. Trump had insisted on a corporate rate no higher than 20%. It is not clear if Republican senators will roundly endorse the deal, which would allow provisions that Senators Susan Collins of Maine and Marco Rubio of Florida had raised concerns about earlier this week.